Hello viewers, my name is Sunday. You are welcome to Against FX. If you are new, please subscribe to my channel. It's very important. Subscribe, alright? You are not paying for you to be able to subscribe. No, you just hit the subscribe button. Alright? We do offer mentorship. Alright? We do offer mentorship. So go to our site, contact us so that we can mentor you. Alright? So that you acquire this trading skill is very important. So you can have multiple streams of income. And apart from that, feel free to always visit forexfactory.com for the news ahead. All right, this one will serve as what? The fundamental analysis is very important. Without wasting time, let's start our weekly review on currency pairs. So the first one on the list is gold USD. All right, that we call it Aussie. All right, so from this point, you can see we are on the daily time frame. When you want to start your analysis, start from the higher time frame, then straight to your time you do execute your trade. So that is why we call it top-down analysis. All right, for you to know the direction of trend, then you now start scaling down to now look for opportunity where you will now be able to identify the current trend where you can now find opportunity to make your money. So that is how it is. So if you look at it, you discover that we've been bullish on gold up to this point, all right? Then price pulled back, pushed to the upside, it did not take out this high. Then when it created this high, it did not take out this high, it stopped shy. That is failed to create. Then it now came down, taking out this support, all right? Then this level now created uh, another block that now dish out a buy, push, it tried to clear out this high, it couldn't, but it created another high, but this time it's a lower high, all right? Then since then, we've been having a push to the downside, all right? So it's very simple. We are bullish, but the current trend is now pushing, is in a corrective phase. So we scale to 4 hours so that we will see the view very well. Then you can now see that very well now that we have this push. After this push phase, this is another block from the daily time frame. After this push, it created this high here, and this high is a psychological number, an even handle. Then after this high was created, we saw a push like this to the downside. All right, it created a low, it pushed, swing to the upside. It did not take out this side, then push to the downside, breaking structure here. So, and after the break of structure, then the 4 hours took charge here, created a demand. After this market shift, it created a demand here. Then it started pushing to the upside. All right, started pushing to the upside. Then it created, because the idea was to take out this high, but then and again it failed to take out this high. So the result of that is from here, it now started pushing to the downside. And when you look at it very well, you now discover that price created a low here, push, created a supply, then break structure to the downside, thereby creating a market shift here. So that is why you see price action is on a corrective move now. So at this point right now, this is where we are. This is where we are. So, and below it, we have 4-hour order block that is seated below it here. So once market opens, we should be expecting some reaction from here, because if you quickly uh, push to the downside, if you move to 15 minutes, all right, if you quickly move to 15 minutes, you discover that change of character is about to happen from 15 minutes. So let's go back. So we can see the price is reacting here. And don't forget, we have a supply level and we have another supply level. We have two POIs here. Okay, we have two POIs here. So now if price should pull back, we should be expecting price to get to this point. If it dish out a sell, then we join taking a short sell. But bear it in mind that we are going against the trend, because the main trend is bullish. This is just a pullback, all right, corrective phase. Okay, now if price should push to the upside again, if it push to the upside right now, when the market opens, we should join from here. All right, but don't forget there's another supply level at the back. As far as I'm concerned, this very one might be used uh, as a liquidity to facilitate the movement for price to come and interact with this extreme, this very one. Before, look at what I'm saying. Price is here now. Instead of this one reacting, it might just clear off this guy. All right, clear off this guy, come tap in here, then we now see a push to the downside to interact with this 4-hour order block here, before we will now see a push to the upside that will now come and create a new high. All right, so if this one failed to do its job, we have a daily order block here that price will come and there will be a demand. All right, price will come here and there will be a demand for price to push to the upside. So we have this one is far, so we should put our eyes on this 4-hour order block. This one is closer. Okay, so it's very simple. And now we should be waiting for price action as market opens. We should be expecting a reaction here. If we push and tap us in here, then we buy. But if he retrace, wait for confirmation if you see any reaction here. But as far as I'm concerned, this very one here should be used as what? Should be used as what? As a liquidity. Should be used as a liquidity to facilitate the movement to this level here. All right. So if you push, if price push, clear this. If price push to the upside, if we push to the upside, clear this place as a liquidity, tap us in here, get to this point, then price you will see a bearish run that will now come and trigger this point. All right, there will be a change of character. Wait for this change of character, then we will now join to go to push to the upside. This demand zone, we have to dish out a buy, then we will now take it up till we target this level. All right, let's be conservative. But the idea is that price should clear this high, create another high. All right, so that is that for gold. All right, so let's pick another pairs. Guys, you remember our analysis of last week? Everything played out, so you don't play. All right, take trading seriously, and apart from that, stick to your strategy. All strategy works, but stick to one strategy. That is how you can be profitable. All right, that is how you can be profitable. Stick to just one. All right, like it's straightforward. We've been bullish. All right, we've been bullish. Then price created this demand here. Created this demand here. It created another demand here. So at this point, we should be expecting price action to, because we are here, it has created a high and is a key level. And right now, we are expecting a pull, a bearish run. We should be expecting a bearish run to this level. All right. We should be expecting a bearish run to this level. All right. Then price will now, this very place will now dish out a buy. All right. To create another high. But if it fails, that means this place is now going to be used as a liquidity. All right, it's now going to be used as a liquidity for price to now push and tap us in here before we now start uh, selling to the upside. So that is how it's a very simple analysis, guys. All right, it's a very simple analysis. We're waiting for price to come down to this place. Then the next point is after the reaction, we should see price going up to create another high. If that fails, we should see a push to the downside to come and trigger this point. Then the next move is for us to uh, uh, once this place is triggered, it will dish out a buy, then we'll start pushing to the upside. So that is that, guys. It's a very simple thing. We don't need to waste much time here, okay, on um, GU. This is the first point of interest. Once we are done with this is the second point of interest. All right. Once it tap us in from here, we are going to target this high here. All right, we're going to target this high here. So we just need to wait patiently for price to come and trigger us and for price to come and tap us in. So it's very, very important. I take my trade on 4 hours. If your time of execution is 1 hour, 2 hours, 15 minutes, 30 minutes, as we have done this analysis, you scale down, then from there you take your entry. As simple as that. So we go to GBPJPY. All right, GBPJPY. The GBPJPY, you can see we have this other block here. We've been bullish. We have a price has created the high, and if you look at it very well, we have a very strong level here. All right, we have a strong, a key level here. So at this point, we have two POIs here that we should be eyeing as soon as market opens. We have the other block here, one other block, all right, the one of 4 hours. Then we have another one. If you scale down to uh, 3 hours, the 3H, you see it clearly. We have even an AVG sitting right here. So our first POI is this very point, all right? We are waiting for price action to use this place as liquidity, come down, tap us in, then we will now sell, like we will now buy for price to create a new high. And don't forget, there's a psychological number right here which is the 200, this very one here. So our target would be, the new high should be that level. Our target should be this level, 200.000. So our target should be this psychological level for price to create another high. Once we are done with this and price push to the downside, we are expecting this very point here to trigger a demand, because this is the actual point, that is this where the origin of this whole move. All right, this is the origin of this whole move. Even though price created a high pullback, then it now started pushing to the upside, giving us another order block here, another POI. But don't forget, there's another POI sitting right here too. There's another POI sitting right about here. All right. There's another POI sitting right about here. So we don't need to underestimate anything when it comes to trading. This is another POI sitting, because here we see the LVG here. There's an LVG, but it looks as if it has been mitigated, but we just need to keep our eyes on it. So this might just be a kind of liquidity for price to get to this point. So let all fingers crossed. As far as I'm concerned, as market opens, wait for price to come down to this point, trigger us in, we will buy. Or if this place fails, we are expecting price to come to this level, all right, this demand level, trigger us in, then we are going to ride to the upside. All right, so that is it, guys. I thank you so much for your support. I am not taking it for granted. Those who have already subscribed to our channel, well, thank you so much. And if you are yet to subscribe, please do. It won't cost you anything. It's just a click. All right, it's just a click. And when you request for your email, it's just uh, for YouTube to know that you are not a robot. That is why it's requesting for those information, just your email address. All right. So as simple as that. If you know you are following me on Facebook, please subscribe. I have about 5,000 plus in on my Facebook listing. On my Facebook, please, you guys should help grow my channel, my YouTube channel, because it's not easy for somebody to be dishing out this kind of information. All right, you might say that you are not benefiting from it, you are not a forex trader, but that is just because you choose not to. All right, if you want to become an engineer, all right, it takes time. You have to study. All right, there are process to it. You have to study. If you want to be a medical doctor, you have to study, and there are process to it. Now, even if you want to be an accountant, it's the same thing. All right, if you want to be a forex trader, all right, trading financial instrument, you need to read widely. You need to study hard. It's not just about maybe clicking something. There are more to trading. All right, there are more to trading. All right, so if you know you are interested, we offer mentorship as well. We mentor you, we'll teach you everything, take you through the process step by step. All right, so contact us on our website so that we can mentor you. You don't need to come to where we are. Stay in the comfort of your home. We teach you online. You ask questions, we put you through. All right, we'll take you through the process and all that. So thank you so very much, you guys. Subscribe, like, share, and don't forget to drop your comment at the comment section. And if you have any page you want us to analyze for you the next time, just drop it.